and welcome. You are watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar, editor for markets on Business Today TV. Well, it was the Fetch fallout yesterday that led the markets to fall 1%. Investors lost about 3.5 lakh crore rupees. But the big question now is that will the bulls be back in action today, or is there some more correction on the cards? We'll discuss all of it. But first up, the top headlines this hour. It's weekly expiry day for the Nifty as bulls and bears battle for dominance at the 20-day EMA. And it's an earnings-heavy day on the Lal Street as at least 10 F&O stocks, including Nifty giants iShares and Bharti Airtel, report their first quarter performance. Very good morning to you, Shail. Great to have you in the Noida studio early in the morning with us. So, we saw the Nifty break down like we were discussing yesterday after the 7-day consolidation. But what does that indicate and what does one expect on the Nifty today? Is more correction on cards?
Good morning, Sakshi, and it's such a great feeling to again come back to the studios. But let's take the bull by its horns, or maybe the bear by its grip. It's more or less a breakdown that happened yesterday. As you would have noticed, the trading range of the Nifty expanded dramatically, and it expanded in the wrong direction. So you see 19,526 in front of you, down about 207 points, and there aren't any positive cues coming either from overseas markets, which we'll discuss a bit later. But the fact remains that we went to a low of something like 19,418, 424. And from there was a bit of a short covering of the immense shorts that we had seen. So we saw a bit of a recovery, and the Nifty managed to hold on to about 19,500 as far as yesterday's close is concerned. So at the moment, it seems that the Nifty has decided to test lower levels, and that's the 20 EMA. One good thing that happened yesterday was that despite a 200-point drop on the Nifty, it managed to close above the 200 EMA, and therefore your headline makes perfect sense that the battle is for 20 DMA as of now. And today also being the weekly expiry, the first weekly expiry for the month of August, we'll probably see some very, very strong volatile action and choppy trade. So it's always best to let the first 15-minute candle form, and at 9:30 then maybe follow the trend, whatever that trend is. From what we see as of now, it's a bit of a downturn, and we've already corrected from a psychological level of 20,000 to about 19,500. So the market's taken back 500 points. Let's see for how long this lasts. Remember, the rally was for 1350, and 500 has been given back to the markets. The issue is that none of the sectors which denote strength are in the green. Everything sort of closed back in the red, except for a couple of stocks like Asian Paints and Divi's Labs and Hindustan Unilever. They really don't make the sentiment on either direction. So at the moment, it seems that the bears have an upper hand when it comes to the Nifty.
All right, bears have an upper hand as far as the Nifty is concerned, but let's come to the Nifty Bank now. That's also trending top on Twitter. So everybody wants to know what to do here. The Nifty Bank Index really declined to its first close below 45,000 mark since July 14 now, Shail. And this index has now lost nearly 1,400 points from its peak. So what are you watching out for on this index today?
So, Sakshi, the correction on the Bank Nifty has been far sharper. Remember, the rally was for 2,900 points from the low of 26th June to the peak of, say, 21st of July. And of that, about 50% is gone. And at the moment, the battle is somewhere like 50 EMA on the Bank Nifty. And as you would know, the range also got expanded to about 700 points yesterday between the high and low. And the index ended just a shade below 45,000. So the same story continues. And if you see the advanced decline of the index for yesterday's trade, 11 out of 12 ended in the green, and all heavyweights, whether it's HDFC Bank, ICICI, PNB, State Bank of India, all of them were deep in the red. The only stock in the green on Bank Nifty was AU Bank, which at no point of time sets the direction of the sentiment. So a bit of a weakness here as well. Again, let the first 15-minute candle form. The first 15 minutes will be devoted to traders who had the the vision or the strength to take a short call on the market yesterday. So let them settle, and then we'll see. The fact remains that both indices are at very, very strong supports, which is the 50 EMA for the Bank Nifty and the 20 EMA for the Nifty. We have seen very, very strong inflows coming from domestic institutions. Remember, they've always acted as a very, very strong support at key levels, and let's hope those key levels work, which I again repeat, 45,000 on the Bank Nifty and 19,500 on the Nifty. Sakshi.
Absolutely, Shell. And of course, what's also going to be extremely important to monitor today is the F&O action. Of course, like you pointed out, first weekly expiry of this month. Which are the stocks that are on your radar? A lot of stocks from this basket are going to be reporting their earnings as well today.
Absolutely. So 10 F&O stocks, including a couple of nifty ones in the pipeline today. And what's really interesting is that, there are no stocks now showing huge strength. So you only have mildly bullish counters. And if you see yesterday's advance and decline on the F&O space, Sakshi, it was 1:8. That means just 20 stock futures advanced and about 180 lost ground. So you can well make out that it's very, very difficult to find out stocks on the long side. But those on the earnings phase would be again Bharti. We'd be watching out on Eicher Motors, Lupin, Dabur, and about 6 more on the F&O space. But if you really put a gun to my head and say ki nahi bhai kuch to batao, so I would imagine we'll continue to focus attention on escorts. Remember, this is a stock that is at record highs, and the short covering that happened on this particular stock was to the extent of a drop of 29% in the open interest. The price that you see, 26.10, is a record close for this particular index. The one that you see on the screen is actually the cash price. And the fact that the volume was pretty okay and delivery statistics were also better. So there's no need to go long on escorts, but at least keep it on the radar. These are stocks where all dips seem to be working. And they need to be purchased, but today is not the right day. And of course, Laurus Labs, very, very high volumes yesterday, Sakshi, about 1.2x in the futures. The stock about 2% higher on the F&O space, 366.70. Very strong long build-up happening, and the delivery statistics are also pretty okay.
Right. So all these stocks we will continue to track once the pre-open also sets in, and when the markets open, we'll come back and circle back to all of these. But let's also look at the global cues because, yesterday it was the global cues largely and the Fitch downgrade that led to the downfall across the global markets. And that seems to be the case even today because the Wall Street has seen a decline. The Nasdaq Composite has registered its worst day, kind of a fall since February. And the S&P 500 and both the Dow Jones have declined for the second day in a row as well. Also, when we talk about the European markets, most of them, FTSE, CAC, DAX, 1.2%, 1.3% down in trade. The Asia markets have also extended their fall this morning for the second day in a row. The only breather, perhaps, is the Gift Nifty that is indicating a mild green start for the Indian markets as well. As far as the flows are also concerned, remember the FIIs have offloaded shares worth 1877 crore rupees yesterday. fifth consecutive day of sell-off coming in from the FIIs. The DIIs also sold in yesterday's trading action 2 odd crore rupees worth of stocks right there. Shail, your thoughts with the kind of global setup we have, of course, nervousness seeping in again on the recessionary fears. But is that something that one should really, care a lot when one is focused towards their own built-up of stocks and portfolio?
It's actually one thing is for certain, people often find reasons to justify either a rise or a fall after the event has happened, right? So if you look at the Dow or the Nasdaq or even the S&P 500, we've seen a fantastic rally over the last 2 odd months on all these indices, including ours. So, it's one of those things that you party really hard and then maybe for 2 or 3 days you fast. So maybe the first 15 days of August or something like that. If you see the year-to-date performance of Dow, it's about up 6%. The Nasdaq is up 33%. The S&P 500 is up about 17%. So these are, stocks and indices where this rally has to be digested. And there comes a time when, some news will come, which is the sovereign downgrade of the US economy by Fitch, and that was reason enough for people to at least take some money away from the sector and from these indices. Therefore, you see that red downtick that is there in front of the screen. Why did the Nasdaq fall the most? Because it rose the maximum. So it's one of those things where for every sensible reaction there was an earlier action. So if you understand the action, then you will not be worried by the reaction which is there in the market. So these are okay, tugs and pressures between bulls and bears. We've had a great rally for the last 5 months. At least let the bears breathe for about a week or so, so that when we start going up back to those levels that we had seen earlier, it'll feel good.
Absolutely, Shail. So not any sign of panic. So don't read the market fall as any sign of panic as of now. It is just a reaction and let it pass through. Things will get better because the uptrend is intact is what the larger, point is. But let me also welcome my colleague, Pawan Nahar now joins in. Apart from the secondary market, the action continues in the primary market space as well. And in case you are an IPO enthusiast, there's one more coming up for you. Pawan has the details. SBFC Finance IPO opens. Pawan, get us the details.
Good morning, Shail. Good morning, Sakshi. As you rightly mentioned, IPO is the flavor of the season, and August will welcome its first main board IPO as SBFC Finance is coming up with its IPO today, and the issue is open till Monday, that is August 7th. Company is looking to raise 1,025 crores, including a fresh equity shares sale of 600 crores, and remaining 425 crores is an offer for sale portion. And the price band for the same has been fixed at 54 rupees to 57 rupees per share with a lot size of 260 equity shares. So talking about the business of SBFC Finance, it is a non-banking finance company which provides secured MSME loans and gold loans primarily to entrepreneurs, small business owners, and self-employed individuals. So the company was incorporated in 2008, which has a pan-India network of 152 branches in 120 cities located in 16 states and 2 union territories of India. So, Sakshi, in this IPO, 50% of shares will be reserved for QIBs and 15% will go to non-institutional investors. Remaining 35% shares will go to retail investors. ICICI Securities, Axis Capital, and Kotak Mahindra Capital Company are the book running lead managers for the issue, while KFin Technologies is the registrar. As per our RHP, the company considers Awas Financers, Home First Finance, Aptus Value, and AU Small Finance, along with Five Star Business Finance as its key listed peers. Sakshi, majority of the brokerage firms are positive on the issue, but the only risk they see is the stretched valuation and being a rate sensitive business of the company. That's all from my side, Sakshi. Over to you.
Got that. Many thanks, Pawan, for sharing all these details about this IPO. Time now to welcome our guest on the show. Vineet Bulinchkar joins in, Director Research at Ventura Securities. Good morning to you, Vineet, and thank you so much for taking the time out for this discussion. First up, the market setup. How does it look like to you? How are you looking at the kind of cues we are getting across the globe? Shell believes that, this event should pass through and should not be an overhang. Your thoughts on the market? Do you also think that, there should be no panic at this stage?
So I tend to share his views. I think that the markets will come off. They were overdue for a correction because they've been running blitzkrieg for the last 3 to 4 months, and some kind of profit taking was in. Typically I've seen markets rally 13 weeks at a time. We were in the 13th week, and then there was that possible correction that took place. Having said that, I believe that the Nifty offers very good investment opportunities. Some of the stocks are quoting at very, very decent valuations, and one should cherry pick PSU banks in this fall, because I believe that going ahead they're going to outperform as their valuation catch up with the private banks is long pending.
Good morning, Vineet. Welcome to Business Today Television. Fairly close to the pre-open trade. Tell us one or two picks that you are looking to add to your existing trading portfolio, or maybe in your investment portfolio. What looks good at these levels?
So from a trading perspective, as I said, I would go with my PSU theme. I would be looking to buy SBI on dips. As I, as I believe that the stock is extremely undervalued. I'm expecting some very good numbers to come out, and that should set the tone for the stock going ahead into the next couple of years. Apart from that, on an investment theme, we like Minda Corporation. Minda Corporation has made a very seamless transition from a ICE heavy portfolio to a more agnostic portfolio that uh, the where the value per kit or per car should continuously keep going up. And we believe that this stock offers nearly 40% upside from current levels, and hence we are recommending as a buy for the next couple of years as a strong investment opportunity.
Let's look at this auto ancillary Minda Corporation in some detail. If the PCR can fire the stock, which is somewhere like 298, and also trading somewhere near its record highs. This is of course a stock with a market capitalization of something like 7,000 crore rupees, and a very decent price to earnings ratio of about 24. Remember, this is despite the stock being at a record high, and we've seen a 5-year CAGR of about 12% each year over the last 5. It's very, very handsomely outperformed the BSC Auto Index as also the BSC Small Cap Index, at least in the past 3 years. So these are a couple of stocks that Vineet is looking at both as a trading perspective as also a part of his long-term holdings. Vineet, any view that you would have on the Bank Nifty?
So as I said that HDFC Bank has been a underdog, SBI has been languishing. So I don't think that there is a very steep fall to be expected in Bank Nifty. I believe that one should be cherry picking to buy and adding more towards the banking stocks, because if India has to achieve its headline growth that the world is talking about, you cannot do it without credit. And to that extent, I believe that the Indian banks are fairly robust in terms of their asset quality, and they're extremely cheap on a peg ratio basis too.
Yes, absolutely. So India's largest commercial bank, State Bank of India, is what Vineet likes, and India's largest private sector bank, HDFC Bank, is what pleases Vineet as well. Apart from that, Minda Corporation is also on his radar when it comes to quality stock picks. Okay, we have the first ticks on the Nifty. I don't want to tell them to you, Sakshi. It's a bit disconcerting, but let's look at stocks which are ticking at least in the green on the Nifty. It's well, very difficult. M&M up 0.5% at 14.95. Britannia up 0.5% at 48.36. JSW Steel up 0.5% at 8.07. We'll let Nifty stabilize a bit and then go for it. Ultratech Cement up 0.7%, 83.48. Let's look at the F&O pack. What looks good to you here is Titan, 2.5% higher, 30.50. Bharti Airtel ahead of its earnings, 2.5% higher at 899. TVS Motors, remember we spoke about it yesterday, 1.5% higher, 1400. Sun Pharma ahead of earnings, 1% higher, 1145. Maruti and Tata Motors mildly in the green, 96.53 and 625 respectively. State Bank of India in the green, 0.5% higher, 600. Let's look at other stocks which are ticking and are resulting in this kind of a move on the index. ICICI Bank is down 1%, 1036. And Sakshi, we have a sensible price on the Nifty which I can share with you, exactly in line with how the GIFT Nifty is supposed to giving directions. Down 50 points on the index, 19,476. Mostly all index heavyweights are in the red, starting with Reliance, 1.5% lower, 2610. No, I don't think so. This is the right price. ICICI Bank again is not showing the right price to me. But the fact is that we seem to be recovering fairly substantially from what was the earlier low on the index. Let's look at the broader markets. Again, I am seeing very odd rates. Okay, let's do this. Let the rates settle down in the pre-open trade, and this is the right time to speak to Vineet in detail. So Vineet, you've picked up two large cap banks in the private, the public space, as also Minda Corporation. Let's pay attention to the entire PSU pack, which was buzzing with excitement over the last 2 weeks. We've seen a very, very sharp explosion of volume and price as well as value coming from this pack. Anything that catches your interest in this high beta but still affordable pack?
So, as we like NTPC, uh, NTPC has got a very, very strong runway of generating capacity for the renewal side that they'll be adding in the coming years. So, we'll see a very strong run in the stock continue. Bale is looking very immaculate. Company's order book is about 5x, and it's just about to, kind of get into its own upside, given the fact that for many years it has been kind of on the negative side, or just loitering around. So we believe that these are stocks that will start moving up again. Bank of Maharashtra is an extremely undervalued bank. We like Dredging Corporation. I think the stock can spin a surprise. We're expecting margins to revert back to 20+%, which were there since 2019 before. Earlier their contracts would not be allowed pass through of costs, but now most of the trend is to ensure that the pass through of costs takes place. So that improves the fundamentals around these stocks, and they should also return back to the dividend table.
Okay, Vineet, I want your attention on the cement pack now. There is news that Ambuja has now signed an agreement with Sakshi Industries to acquire the company. Some of the details that we are getting is that Pan India cement manufacturer will be acquiring a 56.74% stake in Sakshi Industries at an enterprise value of 5,000 odd crore rupees, 114 rupees per share odd, and the acquisition could be seen completed in the next 3 to 4 months odd right here. Your thoughts on this agreement? Of course, the news came in yesterday, the details coming out today. We are also expecting the management to give out a statement at around 9:50 on this acquisition as well. Thoughts on this, and what will this do to the entire cement pack, which has been looking at a lot of competition, mergers, acquisitions over the last 6 months and 1 year or so?
So I believe that the Adani Group has set the cat among the pigeons in the cement pack, and their first target has been Sanghi Industries. If you look to see Sanghi Industries, absolutely geolocational advantages are immense. They have three mines for energy needs around in a 50-kilometer radius. They have a port. They have very, very rich limestone
Absolutely.
availability all within their vicinity. And it was a surprise that the stock did not do well over the last few years, and actually had to be referred to for some kind of resuscitation from the banks. But I believe that this sale is a sensible option not only for the management, existing management, but also for Ambuja, for the Adani Group, because it's a very cheap deal with very, very good operating efficiencies that Adanis can instill in the fashion that they've done with ACC and Ambuja.
So, a bit more on details as far as this acquisition is concerned. Vineet is right on the ball when he says that it has very rich limestone reserves. About 1 billion tons worth of reserves is what the data says. And Sanghi has this India's largest single location cement and clinker unit by capacity, as well as a private jetty and a captive power plant. So the transaction is immensely beneficial for both Ambuja as well as Sanghi. At the stock price of Sanghi, you will see 100, which is seen yesterday, up 5%. And the all-time high for Sanghi is somewhere like 139, which we saw in November of 2017. Of course, the promoters of Sanghi Industries will get something like 1675 crores for selling their 56% stake. So this is what the transaction is. Sakshi, remember, we are searching desperately for good news, and probably this is something which might trigger the bulls into some kind of activity apart from my green tie and green shirt. And that's how the market is as of now, down 62 in the pre-open trade at 19,643. Let me just come up with the numbers. Okay. Reliance is settled 0.5% lower at 2475. ICICI Bank is down 1% at 976. Let's see what's in the green. Something good. Favorite of Vineet, State Bank of India, mildly in the green, 598.65. HDFC Bank flat 1640. What else is in the green? Well, none amongst the index heavyweights. Let's look at the broader FNO picture, and we'll wait for Mr. Palvia to log in. But at the moment, Berger Paints, Sakshi, I remember Chandan Tapadia spoke about this stock, 720, it's the top gainer, 1.2% higher in the FNO space. Marico, Ambuja Cement, of course, 1% higher, 465. Hindustan Copper, 0.5% higher, 147.65. And iBulls Housing Finance, 0.5% higher at 149.65. Remember, I'm talking about super high beta stocks which set the sentiment, although we've seen nothing happening on the index for the last 7, 8, 10 days, except for a sideways to week consolidation. Vineet, anything that catches your eye when it comes to the pre-open?
As you mentioned, India Bulls looks interesting because there have been several smart money hands getting into that stock, and that could possibly do well if the markets were expected to turn around. PVR Inox is one counter that I'll be watching closely to see whether the sentiment is changing now towards moviegoers. I expect some changes to start happening out here.
I wanted your attention on the pharma pack now. I remember last week when we were discussing Dr. Reddy's was on your top pick. Today, looking at Mankind Pharma after the earnings, the pre-open is indicating a sharp move on the upside on Mankind Pharma. Remember, the profit for this company surged about 66% to 487 crore rupees. The revenue has risen 18% on a year-on-year basis at 2578. I remember discussing with you when the IPO was about to come as well, and you were positive on this company too. After the listing, the stock has performed very well, and even today, if you see a sharp spike of 9.2% at 1900 Mankind Pharma post the earnings, what would you assess on the earnings, and how would you advise investors to go about the stock now?
So I think it's richly valued, and notwithstanding the numbers that have come, and investors should continue to hold on to the stock. I'm not advocating buying anything new out here because there is no fresh triggers because the valuations are quite rich. So one can just continue to hold on to your existing investments if you're having any.
Okay, let's look at other stocks, which are affordable in the nature and have ended positively. Maharashtra Bank, one of another favorites from Vineet's side, 0.5% higher, 33.50. IRFC, consolidating near record highs, 0.5% higher, 39.90. HUDCO, 0.5% higher, 64.15. Motherson Sumi, 60 flat. Punjab National Bank at 59.60 is 0.2% higher. Remember, all these are very, very high beta counters, and since they are opening in the green, and we have a positive news coming in before markets open as far as Ambuja and Sakshi Industries are concerned, it's just a 62-point drop on the Nifty in the pre-open trade, 19,463. Let me just check the chart and find out what that level means for the Nifty, by which time Sakshi will be handling the command. Sakshi, over
Right.
to you.
Yeah.
Let me just get some
Absolutely.
sense.
You know, before the markets open, another positive news that could actually, give some kind of a support to the bullish sentiment back home is that Morgan Stanley has now upgraded India to overweight rating, while it has downgraded China to equal weight rating as per reports. Remember, a team of Asia strategists at Morgan Stanley has raised the India rating, saying that relative valuations are less extreme than in October, and the nation's reforms and the macro stability agenda supports a strong capex and profit outlook as well. Beneath, how do you really look at this vis-a-vis the other emerging markets, developing markets as well, and the developed markets? We are looking at brokerage houses, complete different stake right here. On India, what does it really mean, and how will the markets react on this news?
So, let's just compare the four largest economies, the Europe, America, India, and China. Barring for India, all the other three markets are extremely high on leverage. In fact, what is not known about China is that although they talk about their economy being about $18 trillion, experts believe that it is more or less in the range of 10 to $12 trillion. And if you see all the various, SPVs that they've carved out, many of them are facing huge losses. Their debt profile is around $52 trillion. And even on the stated 18 trillion economy, they are leveraged 300%. So I don't believe that they will be able to ease out of this situation anytime sooner. The US has just hit 1 trillion on their uh, interest payments on the federal debt, and if you drill down to credit card payments, their costs are galloping. Per capita is about 7,500, and galloping, expected to gallop at about 30%. So with these kind, and Europe is already into the ice box. So if you want to see the warmth and the spectrum of your infrared, I think India is the market to be in, and that is where the money will flow.
Wonderful. With these lovely comments, let's again focus back on the pre-open trades. What are the 3 or 4 stocks which are at least on my radar? Of course, Ambuja Cement and Sakshi Industries would be first amongst the stocks that we would track. Ambuja about 1% higher at 465. One very, very quick comment we need on Ambuja before markets open. 465 to you. What would you say?
Definitely a buy. Look at the capacities that they're adding. Look at the acquisition spree that they are on. It is soon going to be another strong contender to Ultratech's large portfolio of more than 100 million tons capacities.
Okay. And at 465, 66, it's exactly at its 200 DMA. And let's see how this acquisition pans out. Of course, Sakshi Industries has a 5% circuit limit on it. So that would be exhausted, I would presume. But at 464, Ambuja is at its 200 DMA, it should see a nice pop. Although the market maxim is buy the seller and sell the buyer. Let's see how it works out. But pre-open trades right in front of us, Sakshi, are not a bad start. Yesterday's low is still protected. We have 19,460 on the Nifty, 70 points lower. Bank Nifty is opening 150 points lower at 44,850. The IT index is down 100, 29,926, and the broader NSE 500 shows a downtick of 63 at 16,795. Okay, without any delay, let's look at what the pre-open trades are showing us. As far as Ambuja is concerned, we'll look at the price in front of us. Ambuja is trading flat at 463, 0.5% higher. But let's pay attention to our index heavyweights. Nifty down 83. So the first slippages are coming at 19,442. Okay, Reliance is down 0.5%, 2472. ICICI Bank down 0.6%, 980. Infosys and TCS respectively 0.6 and 0.3% lower. The only stock in the green in the heavyweight space is HDFC Bank, 1641, and that's too flat. Nothing much there. ITC and SBI down about 0.3% each. Kotak and Axis down 0.5%. So Sakshi, the initial trade is slipping towards the favor of bears. We have 19,450. The index opened 62 points lower. It is now 83 points lower. So some strength that is getting added to the bears side. In the FNO space, Vedanta down 5%, 258.80. Indigo down 2.5%, 2,500. Titan down a third, 29.65. India Bulls Housing, nice green tick, 2.5% higher, 152.85. Let's look at other gainers apart from India Bulls. It's Aurobindo Pharma 175.830. Laurus Labs, like I had pointed out, 1% higher, 368. Sun Pharma ahead of its earnings, 1144, up 0.5%. Let's look at the broader markets. Let us see where initial ticks are coming. Nifty is now down 70 at 19,460. Sakshi had pointed out Mankind Pharma up 7%, fresh record high, 1868. KSB Pumps, fantastic earnings, fresh record high, 6% higher, 2455. Let's look at all-time highs. Poonawalla FinCorp, 400 on the charts, 2.25% higher. And in terms of losers, you have Gujarat Gas, 6% lower, 442. Dabur, 3% lower, 549. Reddington, terrible numbers, 2% lower, 161. And Nazara, 2% lower, 677. Sakshi, what have you caught?
Well, absolutely. Sanghi Industry 2.5% up, 103, and the cement pack is buzzing. Star Cement up 5% as well. So clearly it's the cement pack that's going to be the focus. Apart from it, of course, the pharma stocks are inching higher. Mankind, you already mentioned 7% up, but you're also looking at Sun Pharma and Divi's Laboratories, apart from Aurobindo Pharma, also ticking up on the screen. Now, even the PSU bank, slightly nifty PSU bank, if you look at the index, it's slightly moving up into the green. If I look at the winners list, you have Indian Overseas Bank up by almost 1%, Bank of Maharashtra, Punjab and Sindh Bank, PNB, Canara Bank up by 0.5%. So these are some of the other movers in the green tick as of now. The healthcare index also moving up, and you're looking at some of the other stocks also from this basket that are shining through a whole host of red screen. So, Laurus Labs, you mentioned, Shell, that's up by 1.4%. Metropolis Healthcare is also up by 1.2% after the earnings came out yesterday. Biocon, Lupin is up. That's got an US FDA approval, so 1.2% up in trade. Glenmark Pharma. So these are some of the names that are inching higher, Shell.
Okay. Without further delay, let's get Vineet back on the screen. So it's not that bad a start, Sakshi, as we were hoping it to be. Like I said, my green tie and green shirt is working wonders, as also is the 20 DMA on the Nifty. and the 50 DMA on Nifty Bank. Vineet, do you really believe in colors doing their magic?
Well, I believe in all sorts of sciences.
Okay, let's get to brass tacks. Two stocks for you. Very, very high beta. Nothing good seems to be happening with Aurobindo Pharma except its stock price. The promoter company, the promoter group is in a bit of a problem. We see all sorts of problems with the US FDA, but the stock refuses to listen. Fresh 52-week high, 842. Would you step in here or is it overheated?
And so, where corporate governance is an issue, I just stay miles away from those gates.
Yes. Okay.
So that's out of the radar for me.
Okay, so we won't talk of Aurobindo Pharma here as far as stock picking is concerned, but let me tell you at 842, 844, it's the top gainer on the FNO space, and this price is what we saw in July of 2021. So it's a 3-year high, 2-year high at least, and the all-time high is about 1054. But we'll stay away from this one. A couple more for you, Vineet, and this one is at a record high. IRFC, deep value still to be had, and the stock buzzing with volume as well as price. 41 rupees. Anything that catches your fancy in IRFC? Is it a long-term punt in the portfolio?
So, see, it is not in the value zone,
Okay.
right? But keeping the railways, grand plans in mind, the fantastic, rollout that we are going to see over the next decade. I think there is one company which is going to finance that is going to be IRFC. So, if you believe in the railways, boom that is going to happen over the next 10 years, then definitely our IRFC is going to be a candidate that will benefit. So it's more of a momentum play for me now rather than an investment pick. And, I would, investors should absolutely play it as a technical play.
Okay. And just the right time to invite our very dear friend, Mr. Rajesh Palvia, on the screen. Welcome, Rajesh, to BTTV. And the markets are already, looking forward to welcome you in a better way than what I can. You just might see a green tick on the Nifty pretty soon, down just 13. 19,500 has been held. Remember, yesterday's low was not violated. Welcome, Rajesh. Your first comments on Nifty. What do you feel on weekly expiry day? Will 20 EMA hold out?
Good morning, Shailji. Good morning, Sakshi, and good morning, everyone. So we have seen a healthy corrective action in the previous session, which was very much weighted by the market, and most of the participants who were waiting on the sideline to again re-enter in the market, they got the opportunity in the previous session. And almost, if you look at the data setup, also 19,400, 19,500, where we have witnessed a maximum put writing activity for this August first week of weekly option expiry. So that level is very well protected by the market, and again we have seen some bit of a recovery from those levels. So looking at the overall setup, we do believe that if we continuously hold above 19,400 level, then possibly this pullback can extend, and yes, possibly we can see again green tick in the Nifty very soon, and possibly again in the pullback 19,600, 650 are the level where we are seeing the Nifty to again move further higher from the current level also. Some consolidation action we can see for some couple of trading session in the range of 19,400 to 19,650. So this could be a possible range for Nifty for next 1 or 2 trading session. But yes, buy on dip should be your strategy, as overall structure for market is on the bullish side. So a lot of stock specific action is happening. Pharma space is showing good buying interest. So most of the focus is towards the pharma space, cement space, as well as FMCG. These three pockets which we are focusing at the current juncture to buy on the stocks fronts.
Okay. Let me just tell you where all do we see long build-up happening in the broader FNO market, and let's go it sector-wise. So, of course, the pharma index at the moment is also the top gainer, if I am not mistaken. Let me just marry FNO with cash for you. And pharma index, yes, 1.2% higher, 15,120. We've seen the small cap index up 0.3% at 11,627. So these are the two that are sort of ticking up well. And for a very, very brief while, Sakshi, we saw the Nifty 500 index come back in the green. So we'll keep on watching this particular space. At the moment, yesterday's high, which was somewhere happening in the last 10-15 minutes of trade, which was 19,526, seems to be acting in some kind of a resistance for the Nifty, but 19,500 holds. Rajesh is with that. Rajesh, any picks that you would like to discuss on an intraday basis or the long term basis for today?
So Shailji, pharma space, as I mentioned, Lupin is looking very attractive, and the kind of breakout we have seen in last couple of trading session, and the continuation of uptrend is happening in the stock prices. So we believe that Lupin can be a stock where one can buy for intraday perspective. 1,040, 1,050 is the immediate target for the stock. Keep stop loss of 1,000 rupees to buy Lupin. Another stock that we like at the current juncture, that is in corrective move, we have again got the opportunity to buy BHEL. BHEL is looking attractive. Stock has corrected in the previous session, but again stock is holding its important support area of 100 rupees. So looking at the setup, it's again opportunity to buy BHEL at current level. Keep stop loss of 100 rupees. And upside target we are projecting around 108 to 110. So these two stocks looking promising for intraday perspective.
Absolutely. So Rajesh, completely in sync with Vineet as far as BHEL is concerned. Remember, we had discussed this stock over the last fortnight, and from probably 85 rupee levels right up to 101 now is what we've discussed. And this level, as Vineet had pointed out, is the highest level since May of 2017. So it's about a 6-year high that you are seeing on BHEL, and the all-time high for this particular counter, Sakshi, is something like, would you believe it, 800 rupees, if not more. It's okay, post split 388, but there have been many stock splits after that. So 388 post splits is now 100 rupees. And as Vineet was really well pointing out, that it has a 5x order book. So those are the kind of supports and strengths on the fundamental side as well as the technical side that BHEL has. The Nifty again oscillating between 19,500 and the yesterday's closing level of 19,526. Let us see how the day pans out. The Nifty Bank is flat as well, 13 points lower at 44,980. Sakshi.
Absolutely. We'll come back to all the stocks, of course. Like Shail pointed out, several of the sectors are now pulling up in trade. Healthcare, small cap, mid cap 100 indices, PSU banks, autos, some green ticks right there. So we will come back to all the stocks that are buzzing. But importantly, the Goods and Services Tax Council in its 51st meeting yesterday decided to levy the 28% GST on online gaming, casinos and horse racing that will become effective October 1st. Now, a review of the same will also be undertaken within 6 months of the implementation. As you remember, the centre also had imposed this 28% tax on the face value of the online gaming in its last meeting on July 11. Now, my colleague Karishma Asudani joins right in. Karishma, what is the fine print of the amendment now, and is there a possibility of the rollback after the 6 months of its implementation?
To make it clear, the 28% GST has not been rolled back or reviewed. It stays on online gaming, casinos and horse racing. Finance Minister Nirmala Sitharaman yesterday also shared that despite uniformity in their last meeting of the 50th GST Council, there were certain states like Delhi, Sikkim, Goa who have requested for reconsideration of the tax rate and also on the valuation if it could be rather imposed on the GGR, which is the gross gaming revenue. Well, the amendment is likely to be taken up in this session, and the tax will be implemented from 1st October. But what's coming out of this meeting, and most importantly, could be some future respite for online gaming companies and casino companies, is that government is ready to look at a review, and this is happening for the first time, that government is willing to give a 6 to 8 months time in order to review this decision and come back in early 2024. If it demands, if the situation demands, then they could lower the tax to 18% or change the valuation as per how the states are also reporting their revenues and parameters.
Well, this is what is happening, at least on the GST side. Remember, a 10% uptick in GST collections for the month of July was at 1,66,000 crores. Anything in terms of economic parameters, whether they are quick indicators such as diesel and petrol sale or electricity consumption, or longer term trends in some in case of tax collections, are all trending up in India's economy. And Sakshi, Nifty is back in the green, 19,529, a mild uptick. Nifty 500 is 14 points higher at 16,873. The reason why I repeatedly mention Nifty 500 is because that is where the broadest sentiment can be tracked across our markets, and if that is in the green, then it's only a matter of time when intense short covering because of weekly expiry takes root. So the first 15 minutes have passed, and the first candle would be showing a sign of recovery. If the next candle closes above 19,530, then let's see whether short covering triggers in or not. Let's get in touch with Mr. Palvia. Rajesh, for you, IRFC, a very strong breakout, 6.6% higher, fresh record high. Would you chase 42.25?
Yeah, definitely very strong buying action happening in the stock, and the kind of breakout which we have seen in the weekly chart also, it clearly indicates that now his stocks continues to hold above 40 level, then possibly next target for the stock towards 46 to 48. So yes, definitely one should remain on the buying side for the IRFC. Keep your stop loss at 40. Upside target 46 to 48 we can see in the near term basis.
Okay. While Vineet has sort of cautioned those investors who like to buy stocks based on fundamental valuations, he feels IRFC is on the higher side of the valuation curve. But Rajesh's view is more technical in nature, which is rather short term. Apart from IRFC, other stocks that are buzzing in the railway space, Rajesh, is IRCON, 95.45, about 1% higher. Would you want to take a shot at this?
So we have seen a very significant up move in most of the railway stocks. IRCON is since last 4-5 trading session, stock is struggling to cross its multiple resistance area, which is at around 98 to 100 rupees. So until the stock not crosses those levels, some profit taking we can see in the stock prices. Though stock has given a breakdown to the upsloping trend line. So if it remains below 98, then some point of profit taking we can see in the stock prices, and maybe stock can come down to the level of 89 to 88, which is the again area where again one can re-enter in the at the lower prices. So wait for some corrective move in the stock prices towards 88 89, then again revisit it, and then I think if it's hold 88 level, then again it's opportunity to buy the stock in the decline.
Vineet, I wanted to take your view on Vedanta. It's now down by 5 odd percent, top loser on the index as well. Your thoughts here? I think a block deal has happened here. Tell me, what do you think about the stock?
So, we just ran some quick numbers, and if we were to take into account the fundamentals and where the commodities are headed, we believe that this stock could go anywhere in the range of 150 to 200. So, not comfortable with the current valuations, and just staying away from this counter.
Okay. Thank you, Vineet, for those lovely views and the two stock picks from your end today, being State Bank of India and Minda Corporation. Remember, these are the ones that are for the long-term portfolio. We'll keep an eye out on them. And Vedanta, now the top loser on the FNO space, down 5.5%. Just the right cue to get Rajesh Palvia's views in. Super bearish is what I see on the charts. This fall is accompanied by a very sharp rise in open interest of about 11%. Rajesh bhai, would you sort of pay attention to Vedanta? What are the charts telling you?
So after today's fall, yes, chart has become now weak on the bearish side. We do expect yes some more pressure we can see in the stock prices. Possibly stock can slide further towards 240 or 238 level on the downside in the cash prices. Though stock is trading in the discount in the future. So looking at the future prices also, yes, it may slide further towards 225, which is the next level in the near term basis. So yes, one can remain on the short side if you have already short the stock on the higher prices. Your stop loss on the future is now towards 249, and if it continues to trade below 249, then possibly 230 to 228 could be the possible target on the downside.
Okay. So, Sakshi, this is a 1 year low for the stock. We had seen similar prices somewhere in July of 2022. If the PCR can fire the long term chart, yes. So, ideally, these are places where you might see some support coming in, at least in the medium term, but with a gap down and it being the top loser. Just look at the volume, just as you rightly mentioned, there seems to be a block that's happened. Something like 18 crore shares have already been traded. Let me just look at the value of this particular transaction, and then we'll come up with a size. Yes, 4600 crores worth of transactions happening on Vedanta alone, and that's how it is. Yeah, Sakshi, you're saying something?
I wanted to, at the same breath, mention, Hindustan Copper. The stock is just on fire. 4%, I think, up in trade. Top FNO gainer as well. You're also looking at the longest winning streak for this stock since March of 2021. The stock is now nearly at a 2-year high. Rajesh, your thoughts on this stock, Hindustan Copper? It also had risen 10% earlier this week, and now you're seeing continuous momentum on the top.
Yeah, so stock has shown very good buying interest in this current week, almost 16-17% kind of gain. Stock has registered with a huge volume as well as the open interest. So looking at the setup for Hind Copper, we do expect that if stocks holds above 145 level, then possibly this rally can extend towards 158 to 160. The kind of volume which we are seeing in last couple of trading sessions is clearly indicates that some buying interest is happening even in this kind of volatile market. Though most of the metal stocks are struggling and getting the supply pressure, but this stock is showing a different behavior. So we expect yes, this buying interest is likely to continue, and 158, 160 could be the possible target. Keep your stop loss at 146.
Okay, that's the view coming in on Hind Copper. Remember, as I said, it's the high beta that sets the broader sentiment. We've discussed a lot of high beta stocks in terms of Hind Copper, as well as a couple of PSU railway stocks. Sticking to the theme, since it's about affordability these days, as also liquidity. Rajesh, before you joined in, one of the picks that Vineet mentioned on the long side was Maharashtra Bank. It's up again today about 1% at 3360, a very juicy price point when it comes to sheer price safety, and the fact that we've seen an all-time high of somewhere like I think 82 rupees on the stock. What is the medium-term view on Bank of Maharashtra?
So recovery is taking place in the stock, and now stock is almost trading near to its multiple supply zone, which is at around 34, 35 band. So once stock manages to give breakout above 35 level with on a weekly closing basis, then yes, this rally can extend. And in the short term, yes, the stock can extend its up move towards 45, 46 level, where one can, again revisit the stock prices. Because if we look at the weekly as well as the monthly setup,
You go ahead. I'm just
shows
watching
that,
KEI.
stock is in recovery phase, and once we crosses about 35, possibly 45 is the next target. So hold your long position, keep now your stop loss at around 31 rupees, and possibly in the short term we can see a good up move towards 45, 46 level.
Understood. Apart from the banking space, let me also take away your attention to the aviation SPAC as well. Indigo reported its Q1 earnings yesterday. It logged in the highest ever quarterly profit of 3,091 odd crore rupees versus a loss last year. But the stock is down by about 2.5, 3% odd or so. What are you watching out for on the charts of Indigo at 24.95? How does this stock look to you?
So this is fourth consecutive day where stock is forming lower top, lower bottom formation, and looking at the supply pressure now, stock is slipped below to its 50-day moving average also in the today's session. So now stocks
Let's go to
remains
Mr. Gupta.
below to 25 40 level, then some more pressure we can see in the Indigo, and then stock can go down to its next support area, which is at around 24 22 2400. So as of now, we do expect some more pressure is likely to be there in the stock prices. So avoid to buy at the current prices. Wait for some more corrective action towards 24, 20, 2400. Then again, one can re-enter in the stock at the lower prices. As of now, till stock is trading below 25, 30 level, some pressure is likely to be there in the stock prices.
Rajesh, apart from the Indigo stock as well, I wanted to take your view on the oil and gas counter, HPCL. Again, this stock also, I mean, company reported, got back in black in Q1 with a net profit of 6,204 crore rupees as well. I wanted to understand from you, the stock is reacted down. It's down by 2 odd percent. But from the oil and gas basket, are you tracking anything?
So most of the oil marketing company are now again, witnessing supply pressure. Though we have seen some recovery in last couple of weeks, but again, on the higher side, most of the stocks are struggling to hold out, and again, the supply pressure is there. So if we analyze the HPCL Hind Petro, again, stock is moving towards its multiple support area of 265, which is very crucial for the stock on the downside. If it's breaks below 265, then it may see furthermore downside pressure towards 255, 250 also. So 265 is the key level to watch for on the near term basis. On the other hand, 280, 82 is the key resistance area. Until the stock not crosses about 282 level, sell on rise should be your strategy, and on the downside 265, 255 are the lower target where HPCL can go down.
Okay. Not much value has been exploited in oil marketing companies, Sakshi, compared with the kind of price jumps that we've seen in other PSUs, but we live on eternal hope. And now is the time to look at corporate radar. We have with us the Chairman Managing Director of KEI Industries, Mr. Anil Gupta. Welcome, sir. And before we start this wonderful discussion ahead, I'd like viewers to see the long-term chart of KEI Industries, one of those very, very rare multi-baggers in our listed space, which has consistently made fantastic returns for our shareholders. The company is in 3 business segments: cable engineering, procurement and construction. It is into high tension and low tension power cables, control and instrumentation cables, and at about 2,400 rupees, the market capitalization is at 21,000 crores. And if you see the 10-year CAGR, Sakshi, each year the stock has appreciated by 78%. Good morning, Mr. Gupta, and welcome to Business Today Television. A fantastic set of earnings that you've declared as far as the quarterly numbers are concerned. We'll go through them one by one. A 14% uptick in top line, 1782 crores. quarterly net profit 121 crores, up 18%. EPS and EBITDA have also gone up. Mr. Gupta, how do you see the next 2 or 3 quarters? Which are the segments where you will see outperformance, and where is the order book stacked at the moment?
Yeah. Good morning. Thank you very much for inviting on this show. I see, as we have guided in our earlier talks, we expect to achieve around 16 to 17% CAGR growth in this financial year. So I will see a good financial year overall, H1 as well as H2. And EBITDA also in the guided direction of 10.5 to 11%. The other question is that the demand in most of the verticals are strong, especially there is a very strong infrastructure pipeline and a good capex coming up from the industries as well. Thirdly, the power sector, which consists of especially solar at the moment, is doing extremely well, and this sector will continue to gain traction in the coming few years. And the last one is exports, which is a good opportunity for us, which we have been building up for last more than 15 years, and now it will see a strong jump from here on.
Okay. Good morning, Mr. Gupta. Sakshi this side. I wanted to understand from you on your capex plans going forward, especially you've mentioned about the 800 crore rupees greenfield expansion in Gujarat. Could you help us with the timeline of this? Also, the execution and the revenue potential that you're looking at going forward.
Sakshi, the capex plan over next 3 years in our Gujarat plant will be close to 1,000 crore. Apart from this, will give us a visibility of revenue of around 4,000 crore in phases over a period of starting from to second year to third and fourth year. At the moment, we are also doing some debottlenecking in our capacities in our existing plants at Silvassa and Bhiwadi at a capex of approximately 125 to 150 crore in this year. And this will also keep coming in phases over H2 and by H1 and or H2, which will give us a good visibility of growth in this coming financial year, in ongoing financial year, as well as in the coming financial year, next year.
Your cash position is fairly strong, about 537, 550 crores on the balance sheet, and debt is somewhere like 330 crores. A very, very comfortable position for a company which is in a very high capital intensive sector. Any chances that you would borrow more to fund your current expansion, or is it coming through internal accruals?
See, at the moment, I see no reason to borrow because, you know, the capex is going into the phases. It is spread over next 3 years. This year, around 450 crore, next year, and another 350 crore, and another 300 crore in the FY 26 or 27. So, and as we are equivalent money, we will be generating also from the profits. So we should be able to fund all these expansions from the internal accruals without any borrowings.
Okay. And what would be at least the medium-term outlook when it comes to views that shareholders should have in terms of the vision of the company? Where do you think is maximum growth coming in?
See, we are looking at doubling our sales over next 4 to 5 years. And that will also lead to some improvement in EBITDA also. So maximum growth will be coming from our existing, verticals itself, like power distribution and power transmission and solar generation and wind generation projects. And there is a lot of, capex coming up in even in the thermal power plants in terms of, uh, decarbonization and other things. Then investments in oil and gas sector, in the refineries, in the upstream sector, and also in the infra line pipeline like metros, rails, suburban trains, then overhead to undergrounding in highways. So all, and then the industries, whether it is steel, cement, or petrochemicals or miscellaneous industries. So all these, and the next big thing is the real estate. So real estate and the construction, where we are also working. So all these sectors are doing well in India, and there is a good, infra investments happening in other countries also, like US, Europe, and Australia and other countries, which is leading to a good demand from, for Indian cables, Indian products in overseas markets. You know that because of many countries are now looking at India for, doing some replacement from China. So that is also, we should see a good opportunity, and we are encashing it. Our exports have jumped to 305 crore this quarter, which is, 17% of our quarterly sales, which was earlier not exceeding 10% of our yearly sales. So that should see a good, demand coming up from the export market as well.
All right. Mr. Gupta, just one quick question. If you could just wrap it up very, very quickly on the margin outlook going forward, and what is the outlook on the commodity prices and the impact on margins in the future quarters of FY24?
Our margins, we could see, margins of anywhere between 10.5 to 11% in EBITDA, for the whole financial year. So far as commodities, our pricing is concerned, commodities goes up and down, but we are always, benchmarking our stocks, inventories, and procurement, aligned with our order booking, so that we don't lose out on the commodity pricing. So, and that has been the trend for, if you can see, for last 3 years, the prices have gone up substantially, but our margins were not impacted. So this, the purchase policy and inventory policy is well defined, and which is leading to stability.
All right. Many thanks, Mr. Gupta, for being with us and sharing all these details about this quarterly earnings. Many thanks for joining us. Let's quickly take you through the biggest development in the corporate world in today's trading action. Mr. Karan Adani, the CEO of Adani Ports and SEZ, is now speaking on the Ambuja Cement's acquisition of Sanghi.
An integrated unit at Sangipuram in Kutch district of Gujarat. It has a clinker capacity of 6.6 million ton per annum, cement capacity of 6.1 million tons per annum, and limestone reserves of 1 billion ton. The cement capacity will be expanded further and will be taken to 15 million tons per annum in next 2 years. We will also invest in deepening and expanding the captive port capacity in order to accommodate larger vessel sizes of 8,000 DWT. Our vision is to produce lowest cost clinker in the country at Sangipuram, and then transport this clinker as well as bulk cement through coastal routes to the markets of Saurashtra, South Gujarat, Mumbai and Mumbai metropolitan region, Karnataka and Kerala. Synergies with the assets of Adani Ports will help us in implementation of this strategy. With the right implementation, we are very confident that we would be the lowest cost supplier of cement in all of these markets. The acquisition of Sanghi Industries will help Ambuja to strengthen its market leadership and increase its cement capacity to 73.6 million ton per annum from the current capacity of 67.5 million tons per annum. With the ongoing capex of 14 million tons per annum and commissioning of 5.5 million tons per annum of cement capacity at Dahej and Ametha in Q2 of FY23, the Adani Group's capacity will be 101 million tons per annum by 2025. Ambuja's goal of 140 million ton per annum capacity by 2028 is well on track, and with this acquisition, we are very confident that we will achieve this ahead of time.
Adani for you, the CEO of Adani Ports and SEZ, detailing for you the acquisition details of Sanghi Industries. Clearly meant will strengthen the market leadership of Ambuja Cements in the country as well. He's also been talking about that he expects to continue to be the lowest cost supplier in many countries of cement going forward as well. Let's check the prices of both Ambuja Cement and Sanghi Industries at this point in time. Sanghi clearly a big winner. You're looking at about a 4-5% uptick on Sanghi Industries share right now. 105 currently, so strong move coming in on that one post the acquisition, so it's locked at the upper circuit. The Ambuja Cement share is also now ticking up about 0.5% at 463 odd levels currently. Let's also look at the markets. The benchmark indices still flattish in trade right now, 19,511 for the Nifty, the Sensex down about 57 odd points, but a lot of sectors and stocks really buzzing below the surface as well. Now when we look at some of the other sectors that are buzzing, of course, it's the healthcare index that's the top gainer in today's trading action, so you can see over a % move on that one. In terms of the big winners right here from the healthcare pack, you're looking at Aurobindo Pharma, Lupin, Ipca Laboratories. These are the stocks that are moving up 3 odd % higher in trade right now. You're also looking at Sun Pharma, Laurus Labs that we've been mentioning, Divis Laboratories. All of these stocks also, Dr. Reddy's as well, all up by a % or so. So Sun Pharma, strong move, 2.6% uptick, 1165 currently on the stock as well. Now when we also look at some of the other sectors, including the the auto pack, now that's looking slightly positive in trade today. So let's see which are the stocks that are buzzing here. Bajaj Auto is up by 1.5% here. Aisha Motors, Balkrishna Industries, TVS Motors. So some ticks in the green as far as the auto pack is also concerned. The mid-cap space is buzzing clearly in today's trading action. From the mid-cap basket, we already mentioned IRFC. That's the top gainer on the Nifty Mid-Cap 100 index today. Mankind Pharma, stellar earnings, and post that you're looking at some positive moves right here. 6.5% uptick for this counter as well. Poonawalla FinCorp up by 5 odd %. And apart from this, you're also looking at Piramal Enterprises also coming up. Laurus Labs, we already mentioned, Oro. So it's pharma, auto, and the mid-cap basket that's clearly buzzing in the trade right now. We'll continue to watch out for more indications on the markets going forward from here, the first weekly expiry of the August month, and how will that really pan out. So do stay tuned with us onto Business Today TV to catch all the updates from the world of business and stock markets. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well.
Good evening, ladies and gentlemen. Welcome to Business Today Television in our ongoing series of how the temperature of